There's a few data points that I'd just like to, you can just opine on. Number one is the Atlanta Fed's current GDP number, and they're always
off the charts.
They're always high. It may not happen, but if you split the difference between where they are and where everyone else is, it's still a number that just we didn't think was possible again.
Well, remember, the Atlanta Fed number is changed every minute.
Right.
But it indicates a direction. You can look at the New York Fed numbers. They're stronger as well. And
where are they?
Above 3%.
Above 3.
So it's...
It'll be a 3 handle, or would a 4 handle just blow you
no, but
away?
I remember right after the election, Larry Summers, Steve Ratner, et cetera, your favorite columnist from the New York Times, Mr. Krugman,
right,
who you love.
With all my heart.
Yep, I know, with all your heart.
Yep.
But those guys were so pessimistic. And remember, we were trapped in this mindset of secular stagnation.
Sugar high is what the...
One of the nice things about this administration, we don't hear about secular stagnation anymore.
Right.
And,
but now, they're going to have to switch their narrative, and it's going to be that in a strong economy, we threw a bunch of gasoline on the fire, and now there's no workers, and we're going to...
Well, I'd rather be there than be in secular stagnation.
But Larry Summers will say 2019 you're going to be 2, and 2020 you're going to be back to 1.5. That's what he'll say.
Well, it comes down to all these fancy formulas. We had Furbus, Julian dynamic stochastic models. This woman is very good on all this stuff, but it comes down to C plus I plus G plus or minus X. Consumption, investment, government, net exports. On all 4 variables, we're doing better. And consumption is still strong. Consumer confidence by any survey is strong. The recent manufacturing surveys, strong. And we're doing well. On almost every cylinder is pumping right now.
How about...
and you and I have not been pessimists from the very beginning.
No, I know. Well,
mainly because of the liberation.
You're an enigma. You're an enigma wrapped in a riddle, surrounded by a conundrum. You're like a Texas...
Call me Winston.
You're like a Texas independent, which I don't know what the hell... I mean, we eye to eye on all this economic stuff. I don't know where the other side comes in ever. I guess social issues.
We're very common sense people in Texas.
Yeah, in Texas, you are. So, anything on the inflation front that causes you to go, ooh, maybe we're behind the curve? Because that's been...
Everybody's wondered, where is the so-called Phillips curve, the trade-off between unemployment and inflation, or employment and inflation? It was mitigated or moved by globalization, now by technology, but we are running up against resource constraints. I would not be surprised, and you also have, I know, views on this, if we saw a little bit of total comp pressure. We're beginning to see it now. Again, I would be looking at the New York Fed inflation series as probably the best thing the Fed has going for it on that front right now. And we're beginning to see settlements that are coming in at the 3% level. 2.8% was the last number that came through formally. So they're closer, but that's not what monetary policy is all about right now. And if you look at what Chairman Powell, Jay Powell, said in Portugal yesterday, if we recede here, and remember, we're going to our 10th year of economic expansion in July, we don't have enough rate increases to give back to mitigate a downturn. So I think what they're up to is a risk management exercise. Yeah. They're trying to get as many quarter-point increases as they can. I like to say Jay Powell is a giant squirrel putting nuts in a tree for when the winter comes. Doesn't have to be a harsh winter, but they have to have something to give back. And meanwhile, they're going to have the balance sheet down to about $3 trillion plus after 2020. That gives them room if they want to expand the balance sheet. But I think they're going to continue to ratchet it upward because the markets are still very accommodating.
I completely agree. I'm trying to find something where I could disagree and sort of help Joe, but I really agree with you. I mean, there's always that risk once inflation starts to run, as you know, that it always overshoots. Yep. That is the slight risk. That's the only slight downside risk, and a lot of it driven by, some of the pressures you talked about in terms of just availability of scarce labor in skilled areas. That's true. But everything else is a real tailwind right now, and these quarter-point increases are really helpful, because they're giving more of a war chest should there be a bit of a difficult winter ahead.
Well, it's pretty clear they're going to get to 2.5. I think they're going to go beyond that.
Well, that's the question, isn't it, Richard? I mean, the markets have to figure out at what point the Fed is simply normalizing for the right reasons and when it's... Because what you're really drawing here is, well, the Fed's going to overshoot. We just don't know at what level above which is an overshoot.
I wouldn't say that.
I wouldn't say that.
I wouldn't say that
that's
either.
For the winter, sounds like.
We would not say that.
No, we would not say that. Nuts for the winter is not the same as saying you overshoot. While the situation is appropriate and while you're managing things in a very smooth way with the quarter rises, why not continue to do that until you reach a point where you believe you've normalized? And markets aren't scared of this going to the next level.
The Fed usually raises until it breaks.
Well, in 13 tightening cycles post-World War II, they've overdid it in 10.
10.
So the odds aren't very good, but they're very knowledgeable or familiar with this phenomenon. They've done it. That's why they're so careful in communicating things and talking to Fed funds futures up, which they do very well now. I'm very comfortable, just so you know, with Jay Powell as chairman. He understands credit, he understands markets. He has a different toolkit than his 2 immediate predecessors, or 3 immediate predecessors. And I think he's perfect for the job. He's a good buddy. I think he's the right guy at the right time, because you have to understand credit and you have to understand capital markets. And that wasn't part of the toolkit, as brilliant as they were, of his 2 immediate
Jay Powell's not in Europe. Are you worried about how they're going to manage this? They're stuck in the muck again.
Who's that?
Europe.
I think Europe is the systemic risk.
Right.
Because as Buffett, your friend, says, when the tide goes out, you find out.
They can't get out.
Well, no, Buffett has a great phrase, which is Becky's buddy. When the tide goes out, you find out who's swimming naked. There are a lot of ugly bodies. This isn't St. Bart's or the islands off of Croatia, in Europe. Yeah. And they're bad credits. And if you're paid to take money, let alone get it free, you're going to make bad decisions. So as that tide recedes, this has to be their biggest worry. And they're not growing like we are. They're not as dynamic as we are.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.